What's up YouTube, it's Louis here. I'm back on the weekend. Can you believe that? A quant update on the weekend. Why? Because we hit a technical target and I'm a little bit tipsy. Went to the pub for some lovely lunch, but less of that because you guys really don't care about me. You care about the chart. And we did hit 130 and this was our minimal target out of this ascending triangle. And one of the main reasons why I knew personally, now just because I personally think it doesn't mean it's true, but in my eyes and through the years of experience in the market, when I see people disagreeing with me in the comments is usually a sign that I am right. Now, of course, take that with a pinch of salt because this is not some thought, you know what I mean? This is just my gut feeling because of my experience in terms of when I say, oh, we're going to go to this. So for example, we have validity. When I say, oh, we're going to go to this target, I have validity because I'm showing data, I'm showing patterns on the chart that have valid technical targets. So how do we get this $130 target? Can you see it says 130.3614? Where did we top out? We topped out, if you can read up here, we topped out at 131, so $1 beyond. So amazing that we hit the technical target. But you can see we got this target from the neckline from the lowest body close to the neckline of this double bottom or ascending triangle. So we had one bottom, neckline, second bottom, and that's the W right there. So ugly, but it is that. So it's just about training your eyes to be able to see that. So yeah, we hit the valid technical target, the minimal one. See, I say minimal because it's the minimal Fibonacci target. Since breaking above $116, you actually have a separate target, completely separate from this ascending triangle target. And this separate target, one of those three targets is the one that you've just hit, the 1.272. Now, this could just be it. You might not go to the 1618. We might just stop at the 1.272 at 130. We've seen this multiple times. So for the bears to now, if we want to see the bears step in, if we want to have this correction like this, if we want to see that, you need to come down and lose this golden pocket. So we now need to come down. The 786 will be support, a stronger support than this, the 1 fib level, because there's more candles in this area, in and around this area, where here you have just a one exact touch. Here you can see multiple touches. So this is more valid as a resistance, now as a support. So if we start coming down, I feel like this has more chances. I'm not saying that it will hold. I'm just saying because there's more touches in this area than this one up here, it's more likely than for this one to hold as support rather than this one. But you can actually come below 107, even though I'm saying this is like the most valid area out of these two. Doesn't mean that has to stop there. You know, we could come back down to the golden pocket. This is what we really want to see held. So let's say we did start coming back down and we held this golden pocket. Our next impulse would be to the 1618 and potentially way beyond that. If right now we were to continue up to the 1618 and then do this correction, we will then continue to these two targets. And it's all about wherever you top out, either here or here, wherever you top out, it's all about this level. Hold this level and we should continue up. If you lose this level, that's when we start coming back down to this previous neckline. And that's what should hold because it's a previous swing high. And when you form a new swing high, you come back to the old one. So but if you were to ever lose that as support, you'd go to the next level of support under. Can you see we topped out here and we started dropping to here? So that is your range between here and here. So if we ever come down to here and lose it, that is your range, the next range between here and here, if you understand what I mean. Guys, if you appreciate that I was able to call out this technical target for you without emotion, just based completely on data, please subscribe. We're trying to hit 3.3k subscribers as quick as possible. So let's try and aim for that by the end of this coming week. Let's try and see 3.3k subscribers. It'd really be appreciated. We're less than 50 subscribers from there. There's over 1,000 of you watching this quant video. I really appreciate it if we could get 50 subs from it. Of course, 150 likes and leave a comment if you did profit on this move, which I gave completely for free. If you want to learn these moves off by heart, well, I will completely brainwash you into knowing the charts by yourself. You won't need any outsider's knowledge. You won't need any YouTuber to rely on. And eventually YouTube will become like a free course. You'll be able to completely read through people knowing, oh, this guy's 100k subscribers, but what Louis has told me, this guy actually has no idea what he's talking about. How the hell does he have 100k subscribers? These are the things that you'll start to notice once you've learned from a course or from a mentor. YouTube becomes a free course because you know absolutely everything. You'll realize, okay, this guy actually knows what he's talking about. He trades like me. This guy is literally talking out of his arsehole. You'll be able to read this. And if you're interested in that, head over to my Twitter. It is Louis_crypto, or it is under the video, the second link under this video. That's it for today's quant update. We've prepared you for potential further bullish targets. As you know, these are all our targets, this just being your minimal target. But yeah, we would aim for 150. Why? Because this was the level I was able to tell you, if we ever lost this, this will begin your bear market to $70. Once we hit 70 in around this area, I said, actually guys, we got one more target down in and around $40 to $50, preparing you guys. And we saw 40. We actually went down as low as 37 before reclaiming 50 and back testing at support. So that's why I said, as soon as we found that $50 support, I told you guys this is a psychological level. Just the same as the 150 level, I was able to say if we lost this, we're going to continue down. And of course, once we confirmed it as support, it means you're going to go up. And this was our range high. We should have never got above 83. This is where we should have come down actually, and then potentially gone up. You could see that would be some sort of double bottom using this previous support as resistance over here as a potential neckline of a double bottom if it did come down. But we never did that. Why? Because Quant was leading the market. Quant was so bullish. It was the secret chart of the market. It was the market leader, guys. So once we did actually fail to get rejected, we found a quick support before continuing into the 200 EMA on the daily. This was also the 55 on the weekly. And I told you guys, it's not going to do much now. Technically, you should expect a retracement. So we had that ready, but we never go on something without confirmation. We want to wait for the confirmation. And that's why in the last few days, in the last week or so, I was able to tell you on the daily time frame, if we're closing above 112 and if we're closing above 116, this is a good long opportunity with a minimal target at $130. So if you took that, even just from this wick over here, if you're waiting for that final confirmation, you still could have made 12% if you closed as of this second, but as high as 17% without leverage spot. So if you leverage this with 10x leverage, some people could have made almost 200%. With 10x leverage, you could have made 170% from this move, just from 112 to 130. But I really would not advise leverage at the moment. Personally, I really don't like leverage. You don't need it. You need it for Forex because Forex hardly moves, but you don't need it for crypto. This is why I mainly moved over to crypto, because I really didn't like the leverage on Forex, and that's the only way to leverage trade on Forex. Because again, I can show you down here, look at the moves for today. That's actually a big move, to be honest. When you're almost getting 1%, that is insane. An insane move for euro against Japanese yen. But you can see here, usually you're getting moves like this on the daily time frame, 0.07. But you got cryptos like Quant do 4% easy, like it's nothing. What was it doing? What did it do yesterday? 11% yesterday. We have these big candles, 17%, 14%. You don't see that on Forex ever. You see these little maximum 1% moves. That's absolutely crazy for Forex. So that's why you need leverage. Sorry guys, but yeah, this is exactly why you don't need leverage on crypto, because the moves are so big. You're so lucky. If you just type in what is the average returns for stock, I'm going to type it with you. What is the average stock returns yearly? So look, about 10% in a year, guys. Average stock market return per year for nearly the last century, for nearly the last 100 years, every year, around 10%. We did that yesterday. We went up 11% yesterday. So this is why I tell you, when we do see these crazy moves, pay yourself, because if people had this in the stock market, they'd be laughing, you know what I mean, if they got these moves daily. So this is why I tell you guys, pay yourself. But it doesn't mean sell everything. It's just, okay, now that I've made, since the bottom, now that I've made over 250% since the bottom, why would you not pay yourself? If you're going down the street and you're selling something for £100, $100, and some guy was like, no, take 250, take 350, take my money, take it, and you're not gonna take it, you know. This is what I'm trying to get at. Just like when cryptos are down 50-60%, if you wanted a brand new flat screen, whatever, and a 100-inch TV, smart TV, whatever bullshit you want to say, 4K, 8K, 12K definition, like, and they said, oh, here, take it for 50% off. You're going to say no. You're going to say, oh, What if you're 70% off? You're going to say no. So this is how you need to treat crypto, as if like it's everyday things in the shop. If there's something on a discount of 70%, you're going to fucking snatch at it. You're going to break your arm for it. But if something's, 100, if something's in the shop 150% higher, 200% higher, double, triple what it should be, you're going to say, oh, I'm going to buy it. No, you wouldn't buy it, would you? So you have to do that with crypto. When something's gone up 300 odd percent, are you going to buy it? No, it's not the time to buy it. It's the time to take some profits and pay yourself for just making almost 300% profit. So this is what I mean by pay yourself. Even if it is just a small amount, and I get those people, why are you going to sell at $100? That's so stupid when Quant could potentially be 2K, 3K, 5K, 6K, 10K. Why are you going to sell at $100? Guys, it's just all about trading, you know what I mean? It's just all about paying yourself. What's the point of making money and not paying yourself? I can guarantee you that's a lot of what a lot of you are guilty of, for not taking profits along the way. And what were people doing, taking profits along the way down? No, complete opposite. Now, if we start dumping, all of you are going to start shitting yourselves, aren't you? You're going to sell down here, and then it's just going to fly back up, isn't it? So this is why, while everyone's like super excited, while people don't want to sell, that is when you sort of want to sell. And I don't mean everything, I just mean take some profits. Big resistance going forward is 150. So this is why I'm telling you guys, this is going to be a big key resistance. Don't expect to just fly through it. If we do fly through it, it'd probably be like a fake out where we come back under, retested resistance, and then eventually coil up and have another go at it, something like this. And that's, yeah. But honestly, wherever we top out, we don't really want to lose this $83 support, because this is the range here. But technically, you haven't retested that W pattern, which is quite a bit lower. So I would not be surprised if we ever go there. I'm not waiting on it. I'm waiting on this to be held as support, because we're in that range, and technically you've already held it as support right there with a incredibly bullish candle, which is a bullish hammer, sorry. And yeah, we should expect the range highs, which is 150, but we've already met a technical target, the first target. So if you were in just a trade, or even if it's just an investment, at least pay yourself. Or if you win the trade, get out the trade. Thank you guys. I'll catch you in the next one. And if you're interested in all this education that I teach, it's over on my Twitter. Private message me there. I've only got 2 slots left, I think, for my mentorship at the moment. So get to me ASAP.